So we'll get started on part 3 of our presentation. Now we're going to cover some of the changes to crop insurance, or some reminders on some of the quirky rules here for 2017, and then we're going to get into the farm bill stuff. And I think you guys will find it interesting just how much this is projected to pay going forward. And we'll use our sample farm, or our farm actually, for the demonstration on just how big these payments could be on the PLC side especially. Some good news actually going forward for cash flow. So on the cover crop stuff, they must be terminated 90 days prior to planting to be insurable. If terminated closer than 90 days to planting, you need a statement from 2 ag experts stating that your management practice will not adversely affect the yields or quality of the insured crop compared to regular recrop, let's say winter wheat. Obviously, this would mostly pertain to winter wheat. The cover crop will terminate itself in the winter from freezing, and that 90-day rule won't be an issue. But if you're going to seed cover crop during the growing season, then seed winter wheat onto it, you need to get a statement from 2 ag experts to get it insurable. To be considered summer fallow, it must be terminated for 1 year prior to planting, so there's basically no way that any ground that you seed cover crop on will be considered fallow the next year. You'd have to idle it for a whole year after that, which isn't going to happen, I don't think. There's some changes to the malt barley. This actually started in 2016, but they eliminated the need to qualify by proving that you raised and sold malt barley in the past to qualify for this insurance. So basically now everyone qualifies for the malt barley coverage. You can insure up to 2.5 times the feed barley base price, which they come out with some good malt contracts this fall, and we're up over 2.5 times that. What's going to be obviously a really poor feed barley base price. You can insure that now. Before it was capped at $2 above the base. You can have optional units by contract. Most of our dryland guys especially probably won't look at doing this because it's so expensive, but it is an option. We're going to cover more of that in our spring meeting because that's when you actually have to decide on that. There's margin protection that you can sign up for in spring wheat in our counties. Yeah, this program is a great idea, I think, as far as how it's structured, but between what it costs and the fact that they subtract your margin protection payment off of any multi-peril payments you receive on a unit makes this program, to me, not a real sustainable one. So just real quick summary, it's only available on spring wheat. You can't be an SCO and margin protection at the same time. And then it uses inputs like diesel, urea, monoammonium phosphate, fuel and stuff to figure your input costs, and then a county yield and price to figure what your gross dollars are. Basically, if you make less money on the county on spring wheat than what they projected, it could trigger some payments going forward. Like I said, neat idea. I don't see how it fits our area very well. So I'm going to skip past a lot of the example stuff on here. Just know if you want to talk about it in more detail, I'd be glad to go through that with you guys at our office, but I don't really see a fit for this program for us. If you terminate your cover crop 90 days or less before seeding, an insurable crop, you must have how many ag experts write letters to qualify for crop insurance on that acreage? 1, 2, 3, or 4? The answer is 2. You can see at our meeting they did relatively well. Just remember you need to get 2 signed copies of statements from ag experts saying that it's okay that you did what you did with the cover crop and then seeded into it with winter wheat. That could be an NRCS employee. It could be an agronomist. We just need 2 ag experts. So here's the big thing, understanding the disaster programs going forward. I'm going to start a new segment now in the YouTube video, so there's going to be a short break in here, and then we'll start right back up from where we're leaving off.